Everyone says don't buy property, buy crypto or buy stocks. But you have to understand property is not just one number. It is a combination of rental, tax benefits, leverage. If you model all of these properly, then properties actually can make you more money than other asset classes. I mean, it makes sense even for a Gen Z investor. Today, I will prove it to you with correct, verifiable micro market insights. Over a long period of time, index funds can actually give you a really decent return of around 12 to 15%. But if we are talking about property and if you also consider the leverage that you get while buying the property, when I speak about the leverage, it's about the loan amount you get. You just have to make the down payment first and the rest of the amount can actually be financed. If you consider that into equation, also the rental that you will receive from those properties, the real estate market is good for investment, especially in India. Think about the fact that the underlying value of the property is also going to appreciate with time. And most importantly, it's a real asset. So just for our understanding, specifically for the Gen Zs, it's very hard to understand how the real estate market works. So let's discuss that first. Now, when you buy a residential or a commercial real estate anywhere in cities, you can actually get a good financing option of around 70 to 80% depending on your credit rating, and rest of the 20, 25, 30% amount you have to make the down payment. So the financed amount is obviously susceptible to the EMIs that has to be paid each month, which scares the hell out of a lot of people because the EMIs usually cost around 30 to 50,000 per month, and that's supposedly a crazy amount. And specifically for a doom scrolling, reel scrolling generation of ours, when we suggest sneakers as the best investment option, for us it seems like, paying 50,000 rupees per month is going to just, lock ourselves in. It's like a prison cell, like bediya pehne ki tarah ye cheez. It's like putting yourself inside of a prison cell. So some Gen Z will obviously say 50,000 EMI each month. Hell nah, like I don't even know where I will be like 2 years from now. I might be on a YouTube creator stint. Who knows, I will be probably becoming an Instagram reeler. So for us, the idea of paying an EMI each month sounds just so intimidating and so scary that we avoid real estate at any cost and rather prefer actually renting the property. But we have to understand how the finance underlying these property transactions work. Let's say if you are buying a plot of, let's say, 60 lakh rupees in area like Hinjewadi, Pune, which is an IT corridor where the rental yield is pretty decent of around 3.5 to 5%. We will be taking a rental yield of just, let's say, 4%. That is, we will be making around 2 lakh 40,000 rupees on a 60 lakh rupee property. So each month you will be getting a rent of 20,000 rupees, and the down payment, considering that you have taken a loan of 48 lakh rupees, that is 80% of the 60 lakh, monthly EMI would be somewhere around 35 to 40 K each month. So essentially upfront you are making a down payment of 12 lakh rupees, and on that investment you are getting the rental yield plus the price appreciation of that area. In an area like Hinjewadi, the price itself is appreciating at around 6.5 to 7% each year, plus you are getting the rental of around 4%. And even on that rental, you have to understand that each month you can actually claim taxes and save taxes on top of the maintenance, the depreciation, and the interest amount that you are paying each month on the EMI. So considering all of that, even if it's a capital gains for you, you have to pay way lesser taxes than what you are paying on the equity side. This is just considering that you have made, very small amount of effort while actually searching for the property, right? If you do a detailed analysis and find the actual market gaps, understand the demand and supply for those properties, and buy very intelligently, then the rental yield that you can expect would be on the higher side. The price appreciation will definitely be on the higher side because you have analyzed while buying the property well. And even if you want to use that property for end use, you can definitely use it. Then in that case you should not think about the investing angle because you are actually utilizing the usage of that property. So you should not think about rental of any kind. Now besides this, there are other ways of actually dealing with these properties. properties, you can flip-flop properties, you can buy, wait for some time for the appreciation, wait for some infrastructure to get built, and then sell off that plot or that land or even a property for that matter. I mean, the underlying issue comes majorly with the data, because the data is not readily available in the market. So you have to, sort of go to different sources, go on the actual field, search, talk to brokers and consultants and all those people to actually get insights about that particular micro market. So what we are trying to do at Bhuvis X, which is an intelligence-based platform for real estate investments, we are trying to compile all of that data together on a single platform and create the intelligence layer for the real estate in India. So investors, the end users, can actually make better financial decisions for themselves. So you can check the link below. We currently have a comprehensive data set for Pune, which is our hometown, and if anybody from Pune is watching this, any investor, any buyer, even builders and brokers, please feel free to reach out. We are ready for partnerships, as well as we are ready to actually serve you have the requirement for a house. The point I'm trying to make is for a data-driven investors and for data-loving individuals like myself, would rather prefer investing in something where the data is readily available in general, rather than actually having sort of a opaque screen in front of you and no understanding of the market in general. Finding the right property, finding the right deal for you is going to be the toughest task, because you actually have to go into the market and then find these niche properties where you can actually see the land appreciation in the long run. Now in Pune, there are multiple infrastructure projects like inner ring road, outer ring road getting built, a new airport getting built, and new metro lines are coming up. In the metro line segment, if you are buying a house, let's say in Pimpri Chinchwad, and then there is some area of Bosri where there are new metro lines coming in, the land appreciation or the price in general of the residential and even commercial real estate over there is actually growing quickly. I mean, when you say the prices are getting appreciated very nicely in a particular area, it's usually the property prices are appreciating in a very specific location, like within 5 kilometers of a metro station, right? I mean, the properties prices are going to shoot up. But outside of that 5-kilometer range, maybe the price appreciation will be a lot slower, or maybe there will be very negligible effect on the property prices. So even the area nearby the airport in Bangalore, like the areas like Devanahalli, their land prices are increasing like crazy, right? I mean, the new corridors are getting formed, new companies are coming into that area. So all of these factors really matter a lot when you are looking for making the right investment in real estate, and that is something that Gen Zs find very hard to do in general, because data accessibility is something that Gen Zs love, absolutely, right? We do not want to go deep and do research and then find numbers and go to RERA websites. People want an organized data to look at where they can actually draw insights very easily. So that definitely is one of the largest issues when it comes to real estate investments. And obviously the other part, the biggest barrier, as I can say, for Gen Zs to invest into real estate is definitely going to be money, because the prices of a lot of properties have already shown great appreciation in the last 10 odd years. Now the property seems very unaffordable, and the actual salaries have not catch up to the increase in those prices of these properties. So the overall affordability of the properties is not that great in most of the metro cities. Let's just try one thing and model the entire equation that we are talking about. Taking the example of that you are buying a house in, let's say, Hinjewadi in Pune, as we have earlier discussed. So let's take the total amount of 60 lakh rupees, down payment of 20%, 12 lakh rupees, loan amount 80%, that is 48 lakh rupees. Now let's take the interest rate 8.5%, and let's take the loan tenure as 20 years. If we open up this EMI calculator and say that I want a loan of 48 lakh rupees at an interest rate of, let's say, 8.5% for a loan tenure of 20 years, that is, the monthly EMI comes out to be around 41,656. Actually, it can be lower in case if you have, let's say, a 7.5% interest rate. or even a 7% interest rate, but you can get that if you have a good credit score, and Gen Z's we don't. So let's take 8.5 itself. So the monthly EMI that is coming up, we could have calculated the EMI on the sheet, but who wants to do that? I'm a Gen Z myself. So the rent that we can expect in an area like Hinjadi, we can expect of around 18 to 20,000 rupees. I'm just going to say 18,000 rupees, right? Just being a little conservative, because I think even the total amount that we have considered is a little bit on the lower side. The actual figures can actually sort of go around 70 lakh rupees. So I will be a little conservative and say it's not the most premium property in the world. So we will take a rent of around 18,000 rupees per month. The rent growth each year would be around 5%, which is somewhere around the inflation rate. So the rents are usually adjusted to the inflation, because as the prices in general grow in the country, the rent should actually go up. Now obviously in India we don't increase the rent on 5% each and every single year, because nobody puts that in a contract properly. So what we do is we'll increase the amount by lump sum every few years. But I mean, we can say that it will be around 5%. Obviously we have to consider the price appreciation on the property, which we will take to be around 6%. I am being a little conservative, but it can be actually more than just 6% if you have bought the property with thorough research. So yeah, I mean, after 10 years, let's say, what would be the price of the property now? So we are talking about 1 crore 7 lakh or something like that, right? Which is a decent appreciation. And the total rent collected in the past 10 years, I mean during the period of 10 years, the total rent we will receive after the end of the 10-year period will be around 27 lakh rupees. So essentially to calculate the remaining loan, we need to use a formula PV, then divide this by 12 to calculate the interest for each month, then put the total number of months we are taking the loan for, that is 250 months, that is 20-year period, and subtract that by 120, because we are looking for a loan payment of around 10 years only. Then you also need to include EMI in negative for each month, that is 41656. So now we have a remaining loan amount of around 33.59 lakh rupees, which is to be paid in the next 10 odd years. So your net equity after 10 years would be the price property amount, or the appreciated amount of the property, minus the remaining loan of the property, that is coming to be around 73 lakh 85,000 rupees. Initial equity was around 12 lakh rupees. Net equity that we have today after 10 years is around 73.85 lakh rupees. If we talk about the IRR, comes out to be around 20%. So now this equation does not really account for the taxation, the inflation amounts as well. Even adjusted with inflation, this is a very good rate of return on a yearly basis. So more or less the rental amounts we are getting are already adjusted to the inflation, but the overall price appreciation we have not adjusted for the inflation. If we replace these assumptions and actually put your actual figures, then we will be better able to sort of gauge the actual parameters that we want to monitor. But even in this case, not accounting for the recurring EMI that you have to pay on a monthly basis, you are getting a return of around 20% on the initial investment of 12 lakhs that you have made. Now obviously this is not the true IRR, this is actually just a equity multiplier. But if we are going for an actual true IRR, also considering the EMI, the rate of return still comes out to be around 10 to 11%, which is again a decent return if we talk about a real physical asset. And all of this is purely from an investor lens or investment point of view. I have not taken the end use. If you are going to use this property as an end user, then you might not get the rental out of the property on a monthly basis. You just have to rely on the capital appreciation, whatever it is. So if you are to actually live on this property, then you can say the IRR or the rate of return for you per year is going to be around 6 to 7%, which is the capital appreciation on that property. And also, just to clarify, we are also not considering the depreciation cost and the tax you will save on that. Also not considering the interest amount you will be paying in the initial 10 years, where you will be also saving tax on the capital gains. But this is sort of a generalized version of all of these things, and we can comfortably say that this property, if invested well, can give you a return of 11 to 12% considering the rental yield as well for that property. So the overall underlying concept still remains the same for most of us Gen Zs. Yes, real estate is very illiquid. Yes, it might yield you lesser year-on-year returns than equity market. But if chosen well, if found the right deal, the right location, whatever real estate type you are going for can actually give you higher returns even as compared to equity markets. If you are, doing the proper due diligence and research and understanding of that market and the new infrastructure that is going to get built in that area, you can actually account for a lot of price appreciation that is going to take place and predict, or even sort of in a broad way speculate about that area and invest properly to get way higher returns than any other asset class that is out there. Yes, the data is opaque. Yes, it is very time consuming, and yes, it takes a lot of research before buying, but believe me, it is a worthwhile investment. Your investment is in the land of India, which is a real asset and which will appreciate in the long run, considering the amount of population and growth the country is going through, the new infrastructure that is coming up, all the developments that the government is doing to actually streamline the process of buying properties in India, and also about data, is going to benefit the entire ecosystem ultimately and going to create a lot of opportunities for investors. And I'm just hoping for the best here. So it is a quite interesting industry where there are a lot of varieties, lot of locations, lot of different areas and micro markets to study, lot of new gaps, lot of new opportunities, and the overall scope is endless. So again, as I said earlier, you can go and check out our website below. We are still in the process of building things. We are creating an unified intelligence platform for real estate rich with data and analytics, and to give you sort of insights about different micro markets in Pune. So thank you very much for watching, and I'll see you guys in the next one. Bye.